Hey, Steve Stretsky here. I wanted to put together a short video. There was a finance committee meeting the other day on the Canadian housing market and home ownership. So you have basically various levels of government meeting with CMHC's CEO, Evan Zadal. It was basically a 2 hour debate. I'll put a link to that full video, but I'm going to kind of summarize it shortly so that everybody can kind of digest, take away some certain points. So a couple of things they talk about is basically there's a lot of focus on the stress test. Obviously various levels of government very upset about it. Stealing away first-time buyers' ability to ever get into the market. Home ownership dreams, etc., etc. But anyways, I kind of disagree with that. I think that the stress test is ultimately a very preventative cause. It's good. We obviously have high levels of debt, etc. So they basically talk about since the stress test, they've seen a reduction of 15 to 20% reduction of insured mortgages, meaning there's a reduction of 15 to 20% of people that no longer got approved because they could not pass the stress test. Obviously, majority of those they said were first-time buyers. Talk about risk sharing with the major banks. So obviously, if somebody goes into a foreclosure, currently the banks don't really pay anything. It ends up going onto CMHC, which is ultimately funded by the taxpayers. So they're talking about risk sharing. The Bank of Canada is still doing some studying on that. I think there's a strong likelihood that goes ahead. And they expect from their studies that will then increase mortgages by between 10 to 50 basis points. So if your mortgage right now, maybe it's 2.5, it could end up going to 3%. So that's what they see. They obviously talk about housing is at an all-time high as a percentage of GDP. So you have very low GDP growth across Canada, and basically, if it wasn't for residential real estate, you would probably be in a recession right now. So there's obviously incentives to keep the market going, but to be proactive in terms of we're the most indebted in the G7 in terms of private household debt. So I've talked about this before, but every average Canadian owes $1.67 in debt for every dollar of income they earn. And basically, CMHC talks about, again, this book I've referenced many times. It's called House of Debt. These guys, it's two very smart economists. They've basically gone back and studied over 60 financial crises, and they found that there's always been a direct correlation in terms of how much household debt you have and financial crises. They talk about, basically summarizes the book. They say that the bigger the housing boom, the bigger the housing bust. Again, those are not my words. That's strictly from these two economists, award-winning economists that went back and studied every single basically financial crises, and that's something that Evan Zadal references many times over. And so what I'm going to do now is I'm going to play a clip here from the meeting yesterday. It's going to be about 4 or 5 minutes long, but it touches on some very good points. Basically, there's a couple of politicians from Alberta. They just don't seem to get it. These are not financial market guys. Obviously the stress test, their real estate market isn't doing that well. And so they're worried about the stress test, pushing more people out of the market. So it's probably not what they need, but it's obviously what Vancouver, Toronto need for sure. And these guys basically dispel the myth about they call it basically a myth, saying there's no problem with our indebtedness levels. And it's really mind-boggling because these are the people that are running the country, and they just don't seem to get it. They just simply don't understand it. So kudos to Evan Zadal of CMHC. Although some people might not like the stress test, they're trying to be proactive versus a lot of these politicians want to be reactive. Once it's already too late, it's already happened. So again, anytime in particular parts Canada, Toronto, where price growth is over 20%, which is definitely not normal. That's not a healthy market by any means. But they like to put this into context. Warren Buffett's annual return, he averages 20%. So these housing markets are making Warren Buffett look very average, and so you can understand the obvious concern from CMHC. And so I'm going to play that clip. Enjoy this. It's very eye-opening. It will explain a few things about the economy, housing markets. It will give you the perspective of not only politicians but of CMHC, and obviously you can make your own conclusions from that. So, all right, hope that helped. Enjoy this clip, and talk to you soon.
Mr. Siddall, thank you for coming today. I must say that I cannot believe that we had about 12 hours of witnesses here, people who are in the field, people who are experiencing this every day, and you come here with a statement that basically says they don't know what they're talking about. I'm sitting here in Ottawa and I know better than they do. I don't think I've ever seen a more arrogant presentation in my life. And so I think maybe you might want to take a minute and just step back and say, some of these people who are experiencing these issues every day might know something about what's going on here. You say it could happen, if it happened. And based on reading a book, I'm appalled. We have a situation in Alberta where we've gone through 2 years of job losses unprecedented in this country, and foreclosures have barely changed. So how do you justify what you recommended to the minister based on exactly what's been happening in Alberta for the last 2 years?
First of all, I apologize if I come across as arrogant. That's not at all my intention. We have people working in all provinces of this country, including Alberta, and we listen to our colleagues in all of the entities and all of the stakeholders who testified to you. Some of them are our clients, in fact. Some of them are our competitors, and we listen quite intently to them. I misspoke if you thought our conclusions came merely from a book. I was citing that as a particular piece of evidence for being concerned about the future, and I would reiterate that concern. And I must say that the problem that we worry about the most, sir, is unemployment. That is absolutely the single creator of somebody losing their home. That's the single risk we face. And economists talk about negative demand externalities. People in Canada will determinedly pay their home. So the fact that our arrears rates are very low is actually worrisome in the sense that someone will save their home by not buying a car, by not buying a fridge, by economizing on their groceries. That's our experience in Canada. And what that does is it reduces consumption. And when we reduce consumption, we reduce economic activity. And when we reduce economic activity, someone loses their job. And that is what we're concerned about.
What we've been told by people who deal with clients on a daily basis is that what you have done is you've done the exact reverse. People who were about to qualify, first-time home buyers for a mortgage, could not qualify under these new rules, so they've gone out and taken their dollars and spent it on vacation or on a car. What would be your comment to that?
I haven't seen those data, sir.
Well, read the testimony then that came before us.
I've seen the testimony.
Times.
I can't distinguish between opinion and facts, so I haven't seen the data.
Well, you're going by opinion, you're not going by facts. You've got no facts to justify what you did. You are going simply on the basis that something could happen, so we're going to take this action now. That's hardly data, sir.
With respect, I disagree. Our housing market assessment is based on models which are based on historical data, and our stress test is based on projections of our own insurance outlook. Those are data, sir. Those are not opinions.
Well, that isn't what we've heard for 12 hours of testimony before us here, and I'm extremely disappointed that someone like you is making those kinds of recommendations to the finance minister based on what we've seen here today.
I'm sorry for your disappointment. It's my job to be impartial, and I don't represent a particular sector. I represent the Government of Canada and CMHC. Those people have people they represent, and I would suggest that you may want to take that into account.
And this is another case of government saying, I know better than the people who are out on the street, the people who elect all of us. This is government sitting in Ottawa saying, I know better than the people who are dealing with this on a daily basis and try to. And how can you say that you're contributing to long-term economic growth when we've got multiple witness after multiple witness giving us concrete examples of how their businesses have dried up because of this one decision?
Their businesses have dried up because the government was involved in a market and providing stimulus, and the Minister of Finance decided to remove some of that stimulus. It's like you're at a party and the party has got too strong and you remove the punch bowl.
Oh, boy.
Time for one quick supplementary.